All right, I'm going to share very open and honestly about how you can make money with prop firms. This might be a little controversial, all right? Some might call me a gambler, whatever. I'm just going to tell you how I do it. And then also, I know other traders that are way better than me that do the same thing. And kind of like once I heard that they did that, I was like, okay, so I'm not alone in this, right? Like, that's good, but it does make money. But I want to talk to you guys about it because it's not easy to do, especially if you don't realize that you can do it or that you need to do it or whatever, right? Or if it'll work for you. Okay, one, prop firms are a casino. Welcome to the casino. All right. They make money when you lose. Casino makes money when you lose. All right. I think Top Step is reputable and they've been on the up and up so far. And yeah, I recommend them. Give it a try. Let me know. Things could change very quickly. But I just thought I'd just put that out there, right? If you don't think this is gambling, then you're crazy. There's so much dopamine going on when you win and lose. Okay, I won't get too deep into that, but if you need to look that up, go study about gambling. You'll understand prop firms a little bit better. Let's go to winrate.io. Let's have a little conversation. Now, yes, my win rate is a little higher than that on average. Sometimes I jump up into the 80s. Sometimes I drop below 55. Usually, if I drop below 60, I start to do self evaluation. Am I FOMOing? Am I revenge trading? Am I over trading? I tend to figure out, like, well, okay, my win rate's dropping pretty far. What's going on, right? Am I getting in my own way? And believe me, that happens, okay? So, but I just thought 55 was a pretty good average middle ground because a lot of people can do this, right? You can almost guess and get this kind of win rate, right? And what I have take profit percentages, but my take profits are based on liquidity zones, right? Based on fair value gaps, based on time based liquidity. Okay. So it's not just random. I don't like open a trade and go, oh, stop loss at 1.15. No. What I Why I put this percentage in here was to get to this calculator, right? So I could click run strategy and it runs this strategy and it gives me about what I would actually risk and make on my actual trades, right? Okay. So let's talk about it. All right. So if I'm trying to pass a combine, okay, I'm honestly this is where the controversial thing comes in. I'm gonna risk about $600 to $700 a trade. That's a lot. 3 trades, you're smoked. You're out. Okay, you start over. All right, and there's a reason for this. Okay, and actually, here's a great example right here. This is crazy. All right, so out of these 21 trades, there's 1, 2, 3, 4 losses. Okay. 21 trades, 4 losses. This is a randomized winrate.com calculator. You click that, you get something different every time. Okay. When you enter trades, it is pretty random, but it's your strategy. And if you're following an actual strategy, you should have an idea, just an idea of what your win rate is. Okay. So over 300 trades, I'm going to close 55%. Inside of that, zoomed in, I'm going to have stuff like this. Okay, even more. All right. What's going to happen here? I'm probably going to lose my combines. I'm going to blow my combines. I'm going to lose my funded accounts. That's going to happen. Okay. So the whole idea of like getting $100,000 account and just keeping it forever and being this like, hedge fund manager for your own personal prop firm account and you never lose it and you keep it and you just slowly make money over. I've never heard of anybody doing that. Okay. And I am connected to people who actually make really good money trading prop firms. Okay. That's not how it rolls. They lose accounts all the time. They blow their combines. They lose their funded accounts. Okay. But they make really good money. And that's what I want to talk about. And I want to be a little bit more open and honest. Look, if you have a gambling problem, just go get a side job. Don't do this. Find a different side hustle. Okay. Trading is about one of the hardest things you can do, in my opinion. That's why we do it as a community. There are links below if you'd like to join. We do help people. We help people develop their trade plans, follow their trade plans, understand what FOMO is, and things like that on a scale where you can help manage yourself as a trader. That's what we do. If that's something that sounds good to you, links below. All right, but let's have a conversation about how to make money. Now, let me ask you something. If I gave you these 21 trades right here and you went to go pass a prop firm, how would you do? You do pretty good, right? And this is not crazy. This is a 55% win rate. But guess what? In a 55% win rate, you're going to go on win streaks. Okay? It's going to happen. Over 300 trades, it's going to happen. This may be a couple months depending on your strategy, right? So, this is a banger right here. You need to be pulling profits like crazy on this. I tell people, they're like, "Oh, I finally made it. I'm $3,000 in profit." I'm like, "Pull half." They're like, "What?" I'm like, "Pull half." They're like, "No. I want that drawdown protection." I'm like, "No, you don't. Pay yourself. Pull half because that's $1,500. Cost you $200 to get that prop firm, right? $50 to try it, the $150 to activate it once you pass. Now you're $3,000 in profit. Pull that $1,500, and then you can put your $1,500 on the line. Maybe $500 per trade, so maybe it'd be a little bit, less than this, right? And if you get another win streak, then hey, you're gonna get more. I recommend in the next, 5 consecutive days that you make $200 plus, that you go ahead and you pull half that as well. All right, you got to pay yourself with this, because what's gonna happen? Boom, 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 boom. Look at this. Look at this right here. Look at these trades. Look at these 10 trades. Those 10 trades would blow your account. You would lose. You would fail combines. There you go. Okay. But you have to be able to look at this on like a big scale, and at the same time kind of narrow in and focus on the next 10, 20 trades. Those 10, 20 trades could be really good or they could be really bad. And that's healthy. That's normal for trading, right? Once you get up into the 60, 70% range and you start closing 60, 70% in the green with a 1 to 2, guys, you can make some serious money with this, because this kind of run starts to happen more often. Okay. These 21 trades, the first $3,000 would have been passing your combine. Okay. So this day right here, you would have passed. So you would have started over right here. Okay. So this would say 50,000. All right. So 70,000. Okay. So 50,000 to 70,000, that's, do the math. That's 20 grand. Okay. You pull half that, that's 10 grand. So there's roughly, I would say, 5 to 10 grand of payouts right here. And it cost you $200. Now, problem is, you get back at it. You get a new combine at 50,000, right? Let's just say you end up blowing this account, right? And now you're starting over. And now you're here on your win rate. And then, actually, you get funded. Boom, right there. You're funded. Okay? You're no longer funded. You've lost that account. Just bang, bang, bang. You're done. You're smoked. So you get back in. You try again. You're done. You're smoked. Okay? You got to realize that this happens. Okay? What happens here? Boom. Funded. All right? Actually, you would have been funded in these 3 trades, and then you would have started over, right? And then you would have been okay, because you would have won this one, and then you'd still be behind, but you wouldn't be dead in the water. And then what happens? Bang, 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 bang. That right there, guys, that's a payout right there. Okay. So I wanted to make this video just to bring this to light, to have a conversation. I know I might get some flack for this, because consistency is the key and this and that. I'm just being upfront and honest on what works for me and what works for people who actually make like a lot of money. I'm not quite there yet. I make money, but I don't make the money that they do. Okay. So please drop some comments down below. Share this with somebody if they're trying to pass prop firms. I believe this will be helpful. One last thing I want to go over is how I actually risk these trades. Okay. All right. Let's go over the risk on these trades, because this is actually really important. So this trade, for example, here, okay, was a trade that I did take, like I said, and this one was a fake one. But on this trade, so stops above the high. When I enter this trade right here, okay, I may enter a contract, and when I move my stop loss up here, maybe I'm risking like $200. Okay, so I might add a couple of contracts, so that way I'm risking $600 to $700. Okay, So what I don't do is just randomly enter a trade and go, okay, well, man, $600 risk is actually like right there. Okay, well, that's not following my strategy because my stops need to be above the highs. Okay, so I need to make sure that I know my take profits and stop losses before I enter the trade, so that way I can make sure that I am going to be risking the correct amount, because that's really what happens. Guys, if I enter a trade, right, if I put like 10 cons on this and then I like put my stop loss there and I'm like, dude, there's like, $900 risk or $1,100 risk. And if that doesn't fit my actual strategy of what I'm trying to do and I need to be risking like 600, I would rather sell, even if it's pulled back, excuse me, and I'm going to give up like $100 of profit. I would rather sell so that way this risk is at the proper risk. Okay, it's very important. All right, so when I take profits, I really want to be a 1 to 2. I really don't want to take profits before that. Okay, depending on my strategy. Right now, I may take profits at certain like London lows and different points of liquidity, but that's a part of my plan, right? Like today, I took profits there, and then I took profits here on this wick. I did end up catching that wick. So that was it, right? So that was the trade. So same thing with this fake trade, right? That we're going to do. When I come in here and I enter the trade, let's say I enter it up here because that's a little more realistic, right? And I put stops below the low right there because per market structure in my plan, that's how I trade. Okay. I'm going to start shaving my trade at 1 to 2. So there we go. Okay. So, but when I enter this trade, am I going to enter 1 con, 2 con, 3 con, 10 con? It depends. The market structure is the one that tells me how many cons to enter because I want my risk to be about the same. Now, if I'm at a half risk trade, then obviously I'll be risking $300. If I'm at a full risk, I'll be risking $600 to $700. Okay. So I hope this makes sense to you guys because this is something that was huge for me that made a big difference in my training journey, was to make sure that I risk the proper amount. All right. I don't drag my stop loss out like, oh, well, if I put it there, then it's a $600 risk. No, I'm going to put it here and I'm going to follow my $600 risk from there. So anyways, that's how I manage the trades. That's how I follow this plan. And that's how I allow myself the flexibility, really to start getting on a plan to make money. So anyways, the links are down below, guys. Please comment if you have questions, and I wish you guys the best. We'll see you in the next video.